Welcome back. So now we'll be talking about fixed versus flexible exchange rates. So by now we know what they mean. We know that under a fixed exchange rate regime, the value of a currency remains the same against all the other currencies. And at that fixed rate, a country must buy and sell uh, other currencies. Okay. And we know that under flexible exchange rate, the price of currency is remains floating. Okay. So the question is, why does a country prefer one particular regime over another? Okay. So broadly speaking, this determines, this depends on a set of national priorities. Say, for example, inflation, the level of unemployment, interest rate levels, trade balances, which means export minus import, and the level of economic growth. A classic example is Zimbabwe. Very recently, Zimbabwe has adopted the US dollar as its own official currency, and Zimbabwe abandoned its own previous currency, which is Zimbabwean dollar, because of hyperinflation. Price level was increasing by several 100% every year, and the country simply couldn't afford having its own currency. So it's because of inflation, it abandoned Zimbabwe abandoned its own currency and adopted and entered into hard peg. Okay, where it abandoned autonomy over its monetary policy. Okay, uh, so before we talk about flexible exchange rate, let's talk about the costs and benefits of uh, fixed exchange rate regimes. Okay, why does a country prefer fixed exchange rate? The main benefit of a fixed exchange rate regime is that uh, price level remains relatively stable under fixed exchange rate regime. Okay, because uh, import price and export price remain the same. So there is less of an inflationary pressure on the economy. Okay, inflation is uh, it's very unpopular. Okay, because everybody feels the pressure of inflation, which we are going through at this moment. So uh, fixed exchange rate has been popular up until the late 80s in many emerging countries. Uh, most of the emerging countries, they were kind of reluctant to move from a fixed rate to floating rate, primarily because they were afraid of an inflationary pressure, okay, which is again very unpopular, politically especially. So this is the main benefit of a fixed exchange rate regime. The dark side is that if you want to maintain a fixed exchange rate regime, the country has to maintain a large quantity of hard currencies like US dollar or euro and gold to defend the fixed rate. Okay, so if you fixed the exchange rate, so you have to, the country has to remain prepared, has to be ready to buy and sell other countries at the fixed rate. And for that, it needs a large quantity of hard currencies and gold to hold. Okay, and it can be sometimes, it can go against, it can be inconsistent with the economic fundamentals. Okay, think about China. Uh, Even 30 years ago, China was not considered as a major importer. Okay, China was a major exporter. I mean, till today, China is a major exporting country. Okay, for it's a major export import partner of Australia, of USA, most of the developed countries. But 30 years ago, it was primarily an exporting country. At that time, China could benefit from a weak renminbi or weak yuan. Why? Because a weak yuan gives a competitive advantage for the export industry. But today, China is one of the major importing countries as well. Okay. So if it maintains, if China maintained a fixed exchange rate, then the Chinese importers would not benefit from it, would suffer from an undervalued currency. Well, the exporters may benefit, but the importer would lose. So sometimes, so China benefited from a fixed exchange rate between up to 2005 when the currency was devalued, but it cannot benefit at the same rate if it adopts a fixed exchange rate at which is below the market rate, below the market price. Okay, so sometimes the fixed rate can be inconsistent with the economic fundamentals. And remember, these economic fundamentals, these priorities, as I said, they change over time. So 30 years ago, a devalued and undervalued Chinese yuan was beneficial to most of the Chinese firms and most of the Chinese people, but this is no longer the case. Okay, so things change. Okay, so these are the cost and benefits of fixed exchange rate.